LTC Properties stock, ticker symbol LTC. This stock is down roughly 6% on the year-to-date chart, while the overall market, in this case the S&P 500, is up roughly 9%. So that's a big difference to start with. On the 27th of April, LTC presented quarterly results where they beat on FFO, EPS and revenue, so that's pretty good. For the upcoming results, one analyst expects a miss. From a dividend point of view, things look pretty interesting with dividend yield sitting at almost 7% and monthly payouts of course. But does this mean that LTC stock is a buy at current prices? Well, in this video I'm going to show you real quickly what LTC does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, comparison versus major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. What does LTC do? LTC Properties is a real estate investment trust investing in senior housing and healthcare. When we check the earnings highlights, we see that net income has increased quite a bit year over year from 14 to 32, and so does the earnings per share, increasing from 0.36 to $0.8. FFO increased a decent amount as well, but not as much as the others. There were quite some positive impacts on these earnings, and most importantly were the higher rental and interest income. Next to that, there were higher interest rates that had a positive effect. And here we see the revenue breakdown. Rental income is by far the biggest income stream, and it increased only a tiny bit, while interest income from financing receivables increased a lot. Interest income from mortgage loans increased also a tiny bit, and so does the smallest segment as well. To me, most segments increased slowly, so this is something to keep your eye on. One of the more important metrics with this company are the dividends. In here we see that they paid 0.57 in dividends and FFO was at 0.66, covering the dividends, but payout ratio is a bit on the high side at 86%. On the other hand, FFO is increasing, so that's the good part here. The average for REITs is around 75%. In this graph we see that LTC is investing quite a lot of money since 2020, which allows them to grow the business, which is of course very nice. And in here we see the portfolio breakdown. LTC has 30 operators in 29 states and 212 properties within its portfolio. So that's pretty diversified and more than enough room to grow the business. Assisted living has by far the most number of properties, but only represents 52% of the portfolio investment. Skilled nursing has significantly lower number of properties but a higher amount of investment, which comes down to 46%. And in here we see the property breakdown once more. To me it looks pretty diversified, but the biggest operator, Prestige Healthcare, is sitting at almost 16%, which is maybe a little bit too much. An important number for me is the debt to EBITDA. I want this number between 5.5 and 6.5 for this REIT. LTC is sitting at 5.8, so this looks pretty good to me. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. LTC is a 1.3 billion market cap company. PE ratio isn't a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it's sitting at 12.7, indicating that they might be undervalued. Later in this video I will show you my 3 price targets for LTC, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 175 million, and in this graph we see that the revenue went up quite nice and steady over a longer period of time. During the lockdown periods revenue went down a bit, but right after things cooled down revenue went up again. Since 2018 margins are going up and down quite a bit, but most recently margins are increasing. we see interesting things happening at the analysis estimations. In 2023 it's expected to see a decline of almost 27% in EPS, but from 2024 we see mid-single digit growth numbers. With the revenue estimations we see almost a 27% growth expected in 2023, and again mid-single digit growth from 2024. Return on assets is sitting at 6.9%, which is below my 10% minimum, but for a REIT it's pretty decent. Return on equity looks really good at 12.6%. And the most important number, return on invested capital, is sitting at 4%, which is not the highest of course. But I like that the current number is higher than the 5-year average. Current ratio is at 17, which is way too high and a big red flag to me. So definitely something to keep your eye on, especially since it's increasing lately. Total debt is sitting at 900 million and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at 5 million, so they can't pay down a big chunk of their debt, which is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and a lot of things. And in here we see that free cash flow is going up over a longer period of time. However, most recently numbers are starting to decrease. And another thing that is very interesting about this company are the shares outstanding. It's going up in the long run, but not as much as with other REITs lately. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.82%, which is a great number of course. Annual payout is at $2.28 and payout ratio is at 86%. As we saw earlier in this video, and not the 78% displayed here. I prefer 50% or lower, so right now they have roughly 14% left in cash to buy back shares, pay down debt, acquisitions, research and a lot of things. There is no growth in the dividends, but to be honest I don't mind that much, since dividend yield is really high and so is the payout ratio. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added two competitors, CHCT and CTRE. On the 5-year chart we see that LTC returned almost 20% including dividends, underperforming the S&P 500 big time, which returned 71%. But other competitors beat the S&P 500 by a decent margin. On the 1-year chart it looks pretty different. LTC returned 7.5%, beating the S&P 500, which returned only 2.6%, but CTRE had the highest return with almost 29%. On the 6-month chart it looks pretty different again, with LTC returning minus 9.8%, while the S&P 500 had a 9% return, which is the highest in this list. On the 1-month chart it's again the S&P 500 with the highest return. LTC had again the lowest return. So bottom line, LTC was beaten by the S&P 500 big time in the long run, and most recently, it also doesn't look great either for LTC. But how about some fundamentals compared to the other companies in this list? We see that these three companies are quite different in market cap and enterprise value. PE ratio is pretty similar and also not the best way to value a REIT. Price to free cash flow is pretty similar as well, so no winner here. Revenue growth year over year is the highest at LTC. The 5-year growth rate is the highest at CHCT, and it's only 1% at LTC. The net income compound annual growth rate is also the highest at CHCT, and LTC is sitting at minus 1%. Last but not least is the free cash flow compound annual growth rate. CHCT is again the winner here. CTRE has the highest gross profit margin and LTC is at the second spot. Net income margin is the highest at LTC, but free cash flow margin is the highest at other companies. Return on total capital is the highest at CTRE as well. And all companies have quite some debt compared to the current cash position. The last thing that I want to check are the dividends. LTC has the highest dividend yield, but no growth in dividends, which is also the case at CTRE, except for the compound annual growth rate. To me, there's no big winner here since it highly depends on your dividend goal. Overall, I think LTC was underperforming the other companies in this list most of the times. But could LTC stock still be a buy at current numbers? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth, I'm filling in 2%, 3% and 4%, since I think they will increase the revenue at the same numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin, I'm filling in 64, 65 and 66%. And for the free cash flow margin, I'm filling in 57, 59 and 61%. For the PE ratio and the price to free cash flow, I'm filling in 11, 12 and 13. It's a slow growing company and not all fundamentals look that great, so I don't want to overpay for the growth and there's no big move or anything. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now LTC stock is at $32. I hit analyze and we only see a few green numbers. And since this is a REIT, I will only focus on the discounted cash flow value and not the multiple of earnings value. We have a low price target of almost $26, a mid price target of almost $30 and a high price target of almost $34. To me, the mid price target is the most justified here, indicating that they are overvalued based on these numbers. My final conclusion on this stock is that I do see why people like this stock. Dividends are pretty great in terms of dividend yield and there's plenty of room to grow and improve the business. However, I prefer the S&P 500 over this stock if I look at the historical returns and the future outlook. A lot of important metrics are not that great and I think there are better deals out there. For now, I'm skipping this stock, but I will analyze them from time to time. And remember to always do your own research and never fully trust what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.